Hey there, welcome to my channel and thank you so much for supporting me. If it's your very first time to watch my videos, please kindly subscribe, click on the like button and also comment. Also, you can actually click on the notification bell so that you can be notified whenever I post videos. All right. Okay, you already know me for indicator strategies, but now recently I've been learning price action, and to be honest with you, I am not there yet, but I felt that I should share what I have learned so far. It's so very helpful, and you will somehow constantly make money with what I am about to share with you now. If you're going to take it serious and apply it to what you already know or to what you don't know, you will somehow start making money in Forex. Okay, so the first thing that I learned when I dived into price action is that one has to start study market behavior. So you have to make sure that you know how the market behaves before you you start trading. Okay, so you have to look into the previous way of which market was behaving and before you take an action. All right. Okay, so what do I mean by studying market behaviors? We talk about your uptrend or your downtrend. Okay. Okay, for me, I usually use your moving average to indicate whether the market is on an uptrend or on a downtrend. So if you have watched my previous videos, you should have seen the golden eggs strategy video where I shared that I use a moving average 300 and moving average 100 for it to tell me whether it's a downtrend or an uptrend. So for an example here, you can see that the price is above the two moving averages. So the moment the price is above it, that means it's an uptrend. And then the moment the price is below the moving averages, it's a downtrend. But then it's a different story with price action, because when you go for price action now, you have to draw trend lines for you to be able to see whether this thing is going down or it's going up. So it will create what they call higher highs and higher lows, lower lows and higher low. And yes, you know, like I said, I'm also learning it, but I felt that I should share a little knowledge that I share, that I have learned, that I have with you. Okay, I didn't really want to go to a 1 minute time frame right now. Let's go back to a 1 hour or 4 hours. That's fine as well. So okay, let's say maybe now we want to use the price action knowledge to know where the trend is going. I mean, now this one, just by looking at it, erase the moving averages from your mind and then just look at this. You can see that that is an uptrend, right? So you are going to draw your trend lines, right? So you draw your trend lines like that, and then you draw another one. So that is your upper trend line and then your lower trend line, just for you to see clearly how your market is moving, right? So your trend actually started your trend actually started here. You see, it started here. So that's where you actually start. And then but then there are more things to consider. Okay, so now let's just talk about trend lines. So like looking at the trend line, you can actually see where your market is going. All right, so you can actually see that the behavior of your market. So it actually went up, it hit there, right? So you would ask, okay, why did it hit here and go down? Because right there you have a support, a resistance line. All right, so you're going to put now a resistance line for you to see it clearly. So somehow you are actually now studying a market's behavior. All right, so that's a resistance line. So somewhere there it's a resistance, and then somewhere down here it's your support. Okay, and that is like a strong support, because from the past you can see that that is like almost the lowest that the market has reached. You see, so this is how you see it. You can see that on okay, let me just delete that. Okay, thank you, I deleted that. Oh, excuse me. All right, so if you were to draw the bigger trend line or the bigger support and resistance, your biggest support will be here, and then your highest resistance will be maybe, okay, for the nearest part would be here. That is like the nearest one. And then another one is here. So that is like where the market will hit and then it goes back. It hits and then it goes back. So you know, just by looking at the past, you know that, oh, the market is going to hit here and then it will go back. If it's going to hit it and if it's going to break this resistance, then you know now we are buying. It formed a new support. This becomes a support. If it hits this and go up, it means now it becomes a support. For here it's a resistance, right? And then for here it's a support. So you know that, okay, let's say maybe you entered the market hey, I don't know whatever that is going on here, it's disturbing me. Okay, so now what will happen is, I'm just going to delete that. Okay, so now what happens is somehow from down there a support, a resistance has been broken, right? So the moment it breaks it, right here you were going to buy, right? And then when it reaches up here, if you look from the past, you would see that, okay, maybe the market, the strongest resistance for the market is there. So you were going to sell, and then you sell, it goes down. That is your, all right. And then it gets down here. You know that from here, somewhere here, it will start going up, and then it goes up, all right. And then when it's up here, you don't just speculate that, okay, you know what, it's gonna continue going up. That is your strongest resistance. So it goes down, it goes up, it goes down a little bit, it goes up, and then it goes down. So here you sell, here you sell, and then down here you buy. All right. Okay, so that's how I understand the markets now. I am still studying more. I'm not saying I am perfect yet, but then I am studying more. So with this, you will know when to stop. So you know that I buy here, I TP somewhere here. My stop loss is somewhere below here, right? So my stop loss will be somewhere here. So if I happened to buy here, because I'm thinking that maybe it will go back up, the moment it breaks your support, you know that you have a stop loss down here. So it's going to save you. Okay. All right. I think I explained that perfectly. All right. So it's the same story here. It's the same story here. It's gonna go up, it goes down. Here you buy it, and then it goes up. Here you sell, goes down, and then you can see what is happening to the trend now, right? You can actually see, okay, I just wanted to delete all of that. So you can actually now see how your trend is going. So you can actually now count what they call wave count. So you know that, okay, since I'm sorry, I don't know why I keep on clicking that. So you know that, okay, since now the market is here, that would be your 1. And then now it went up, it goes down, it went up again, that would be your 2. So it also helped to be patient. So you know that, oh, okay, that's my 1, that's my 2, which means going up, I will have a 3, I'll have a 3, I'll have a 4, 5, 6. So this thing is going up. So I should also look for buying opportunities because this thing is going up. So now for here, I'm not expecting a 9 because it's going to reach our strongest resistance. So I'm expecting it now. I'm expecting volatility 751S now to hit that and go down here, right? So did I just say I'm not expecting a 9? Oh yes, I am right. I'm actually right. I think I am right. Yes, so right here you can actually even count from this side. 1, 2, 3, 4, 5, 6, 7. You see? So you are able to see that, okay, so if this thing, it's going to continue going up, then now, okay, that's your 8 is here. So if it's gonna continue going up, let's say now you can actually take an advantage of that and sell. And then after selling that, if it touches here and it doesn't break that support trend line, then you can actually buy it. And then when you buy it, so now we're going to have an 8 somewhere up here. So this will be your 9. But then possibility is it might not even get to there, because you can see it gets shorter and shorter as it goes up, and then it can get shorter here. But now, from my knowledge, from the knowledge I gained so far, I think this thing has now reached it's the strongest resistance, as now it's gonna go down. It might even break that and go down. All right, so it might now turn and becomes it might now turn and becomes a downtrend. Okay, so let me delete all that mess. So that's what I learned so far. So let's say you are someone that trades on 1 minute time frame, or 5 minutes and all that. So it also helps for you to actually go to your 4 hours. It helps for you to go to your 4-hour time frame, and then you draw all that just to see how the market is going, and then you will know that, okay, now I can actually go to my 5 minutes and see that, okay, now I can start selling it. You see, it's actually the same principle there. It's the same principle. You have your strongest resistance, right? You can see that from the past, it mostly hit that part, and then it goes back down. So even here, it hit that part and then it goes down. It hit that part, it goes down, right? So it's now going down, and then because now this is the lower time frame and we don't want to be greedy, so somewhere here we can actually TP. Somewhere around here we can TP. In fact, you can actually TP there, right? If you don't want to TP, you can actually just trail your stop loss. Something called trailing your stop loss. So you can trail your stop loss. Okay, so that's what I learned so far, and the market is exciting now that I know that. It's not only the indicators that I know, I also know price action, and it gets exciting. It's not frustrating. I won't have a frustration of those fake account managers coming to me saying, I can actually help you make so and so money. I'm not against account managers, okay? I'm just saying it's great for you to have the knowledge for yourself, so that you'll be able to manage your own money. All right. Okay, so another thing that you can learn, I was talking about you knowing, okay, I actually have given you a lot of stuffs now. You knowing whether the market is an uptrend or a downtrend, when to stop and when to TP, when to enter. I think I have highlighted most of that from what I have said so far. Okay, and also for another advantage, for your advantage of getting into the market. Okay, that's a daily time frame. Let me just go there. All right, your other advantage is that you should know chart patterns. All right, so chart patterns are very important because they will also help you to make a decision. All right, so now for an example, let's look at that. Look at that. That's a pattern. It's a triple bottom. So that triple bottom tells you that, okay, I am going to buy. All right, so you know that, okay, somewhere here, when it creates a triple bottom, so I am enjoying this thing, guys. I'm enjoying this thing. I'm actually enjoying it. I'm enjoying it. So you actually have a lot of things or a lot of pointers to look at before you enter a market. You see? So it's now that trend line tells you, okay, if I break that, it means I will possibly continue going down. But then now I created a triple bottom, so I'm going to shoot up. So you can actually buy somewhere here. Oh, so you can actually buy somewhere. Let me just do this. Somewhere here, you buy. So you can actually buy somewhere there, and then you buy and you make money. So that's all your money. That's all your money. It went up until it reaches there. So you must TP maybe somewhere here. You TP. Don't be greedy. You must TP. Don't be greedy. TP. Take your profit and run away before the broker cleans you up. Okay. Yeah, I think I explained most of the stuffs, man. So even before you start trading on your 1 minute or your 5 minutes or your 30 minutes, it's very great for you to look into the highest time frame and see how it's behaving. Just see how the market is behaving, and then you go back to your lowest time frame and decide that, okay, now the market on the higher time frame is selling. It's supposed to be selling. It's about to reach the strongest resistance, so now I can sell. So you can see, like, even here, we looked at the highest time frame, and then now, okay, we looked at the highest time frame, and then now here we saw that this is our strongest resistance. It's going to sell, so you sell from there. Maybe you were going to sell here, so you were going to have a little panic attack, and then it comes back in your favor. It's selling. It is selling. It's going down, so you can be trailing your stop loss. You trail it, you put it there, stop loss. Unfortunately, the market can actually stop you out most of the times. It stops you out most of the times because the market is volatile. So it's better than not getting out in profit. So it's either you put a TP, I don't know your method of trading. So it's either you put in a TP, or just, you can actually put in your TP, or just move your stop loss. All right. Yes. So I was talking about patterns. That's another pattern. That's a pattern. That's a pattern. That's a pattern. It's forming patterns. So those kind of things will help you. So go and study your double bottoms, your triple bottoms, your head and shoulders, know them, your saucer bottom, your falling wedge. Go and study such things. It will help you a lot for you to trade the market. So what I do, let's say maybe I want to trade on a 1 minute time frame or on a 5 minute time frame. I make sure that I look on a 1 hour and see how it's behaving, and then I go and place my trade on a 5 minutes. If I want to trade on a 1 hour, I look at my daily time frame or on a 4 hour time frame and see how the market is behaving, and then I go and trade on a 1 hour time frame. All right, remember to put in your stop loss or get out of a trade quickly. you must make sure that you set a daily target. For those who are on my Telegram group, they know that I am very strict with setting a daily target. If I say I'm setting $10 a day, I will set a $10 a day, and if I make a loss somehow, I'll just leave the market for that moment. All right, so have a daily target. Just say, okay, I'm going to make $10 a day, and then I get out. Make $20 a day if you are a pro, and then maybe 30, 40. Most of the pros are making like $100 maybe, and it also depends on your equity. I recommended from my previous videos that if you wanna trade well, make sure that you have $100 equity, and with $100 equity, trade as if you are trading on a $10 account with $100 equity. So just have a daily target and say, I'm going to make $10 a day. In 7 days, you will have $70. In 2 weeks, you have $140. You see? So in a month, you have nice money. So don't work on a getting rich quick scheme. So you see what I was talking about. The market is going down. The market is going down, and it's now reaching our support line. So you can actually just move your I want to add an object. Just move your stop loss today. So you probably have bought, you have sold somewhere here, or you have sold somewhere here. Somewhere here you have sold, right? And then the market went down. It went down in your favor. But then somewhere here, because that's your because that is your support there, you have to TP. Remember, guys, I said I'm still learning this thing, but somehow I find it exciting. So I am hoping that this is so helpful to you too. So let's say you want to trade on a 1 hour time frame. Look at your 4 hours first. Look at how the market is behaving, right? You want to trade on your 5 minutes. Look at your 30 minutes, your 1 hour, right? And then also you can also add your moving averages for them to help you if the market is going down or going up. For an example, this is a one minute time frame. That is your 200 and your 100 moving averages. The price is below it, meaning now it has changed direction. It's going into a downtrend, right? So now that your market has gotten there, you TP. And then wait for the next behavior. Or it's either you TP or just put a stop loss somewhere up here or somewhere there. It's up to you where you want to put your stop loss, but you are in profit. That's the nice thing about it. You can use your 20 MA, you can use your 50 MA, you can use your 200 MA. And also, the market has what they call breakouts. So you can actually trade breakouts in the direction of the trend to avoid false breakouts. So that's another thing that I learned. To avoid false breakouts, just trade breakouts in the direction of a trend. So for an example, that's an up from what we have checked here. It's an uptrend, but you know that your uptrend has now reached the highest support, the highest support, right? So now let's say now the highest resistance. I'm sorry. So let's say now it haven't reached the highest resistance. Maybe it was somewhere. For an example, let's say it was somewhere around here. you know it's going on an uptrend, right? So since it's an uptrend, that means I have to look for buying opportunities. So whenever it's selling, I'm not going to enter. I will only enter when it buys, right? Yes. So for an example, here the market is going down, right? It's retesting. So after retesting, you can actually buy. So usually the market will be on a range. It's retesting, and then after retesting it buys. And look at this. This is your support. It forms a V, and then it forms a neck, right? Or a head, or let's say this is a shoulder. It forms a head, and then it forms a shoulder, right? From what I learned on price action, you can actually just draw. Oh, that's not what I wanted. What do I want? I want this. Okay, so from what I learned, you can actually draw this line here just for you to know where to enter, right? So you can actually look at that pattern there and then know that, okay, this, so I can actually enter the market right there, somewhere there you can actually enter your market, right? Okay, so guys, I think I explained enough. I know that this video maybe it's not proper, but then I tried to explain what I have learned so far, and then next time when I do this kind of a video again, I think I'll have more knowledge, and I'm so going to share it with you guys. So I hope it's helpful. So just go and study your patterns, go and study, get a cheat sheet. You should know your ascending triangles, your descending triangles, your uptrend corridor, your downtrend corridor, your bullish pattern, your bearish pattern, your bullish rectangle, bearish rectangle, your head and shoulders, your inverted head and shoulders, like this one here. This one here, it's your inverted head and shoulders, right? Your double bottom, your double top, your triple bottom. So go and learn such things and take advantage of the market. You will see that you will start making money. So you will not only depend on your indicators. So even when you have your indicators, it's nice, but you will not only depend on your indicators, you will also depend on the market behavior, on how the market behaves. And to tell you the truth, all the markets almost behaves the same, because they range, they break out, they have a trend. So just go and learn that. Kindly subscribe and hit the like button. Thank you for watching. I know that my video was not so perfect, but I was just trying to share something that I have learned recently, and then I think I have passed my point across. Thank you so much, guys.